So there are four gates that can generally limit a individual's ability to deduct their business losses. These are basis, at risk, passive activity, and excess business. So while they sound complex, the simplest way to think about it is basis refers to your skin in the game or how much investment you have within that entity itself. So, in order for you to have taken a loss, you need to have basis, which refers to your economic skin in the game. Secondly, you have at risk. There can be times where you have basis, but if you are not personally liable for the repayment of that item that gave you basis, as in the case in LLCs with non-recourse debt, then you are not at risk, and that can limit your ability to take that loss accordingly. So basis and at risk are the first two, and many people often will confuse them, and I somewhat think of them as very close cousins. They are very related and often work together, but they are separate concepts, and that at times can have some meaningful impacts in a partnership setting, particularly when it relates to ability to take distributions, but maybe not take losses. Beyond basics and at risk, you also have passive activity losses. For certain types of income, let's call it rentals and businesses that you do not materially participate, you are only able to offset passive income with passive losses. A common misconception is that things like interest and dividends will be considered passive income. However, they are considered to be non-passive investment income, which is a separate category than passive income. So those passive losses will not offset. Finally, the 2017 Tax Cuts and Jobs Act introduced what's called the excess business loss limitation, which limits how much of your business loss you are able to offset against other forms of income. So in an example where you're not limited by anything of at risk, basis, or passive, and your business has a loss, you may only be able to offset up to a certain number, currently in the neighborhood of around 650,000 for 2026, against your other forms of income. So these four areas are ways where your business can have a loss, and you'll see that negative K1 come in thinking it's going to potentially offset some of your other income, but it actually may not be available to you. All of these ultimately become timing differences in that you may not be able to take them today, but at some point in the future, they should be able to be released and offset when either you have basis at risk or you dispose of the passive activity or have other passive income, and the excess business loss will release over time, subject to limits each year.